What I am is a practitioner, and I've been working in this industry for many years, decades, in Africa, in sub-Saharan Africa in particular, 22 years. I am doggedly focused on finding solutions for sustainable housing in emerging markets everywhere, but on the African continent in particular. And I say sustainable housing because the whole question of what's affordable to whom? I don't want to get into that conversation. I think what we want to talk about is sustainable in all the connotations of sustainable. Is it environmentally sustainable? Is it climate resilient? Is it economically sustainable for families and for all the participants in the housing ecosystem? Whatever housing program, housing delivery program we come up with has to work for all the participants in the value chain. And I think that's part of what is a frustration for me when I come to these conferences, because so many people have great ideas, interesting innovations, but somehow it's just not coming together in a way that allows us to deliver on our hopes, our needs. So there's a gentleman, the whole concept of housing ecosystem, housing value chain, it's been talked about quite a bit. There's a professor at Dartmouth College, his name is Ron Adner, and he's written a book called The Wide Lens. He makes the case that innovation cannot work. And I think what we're talking about in the space of housing is innovation. We're all trying to think about how do we meet these needs in today's environment, today's economy, our global geopolitical situation, financial situation, climate situation. How do we meet this tremendous need utilizing the tools and technologies that are available to us today that we didn't have 50 years ago? What we don't have today is money. Well, we'll talk about that in a little bit. There is money out there. I just think we have to be more creative in the way we attract that money to our business. So his point is that this value chain housing ecosystem is only as strong as the sum of the parts, right? If you have one link that cannot adapt to the innovation, to the environment, then you have a failed innovation. So we were talking about this in the context of housing developers, because developers normally are the ones who are responsible for managing all the relationships, all of the components to produce this ultimate product for families. So his point is that you need to raise all boats. You have to be sure that all of the partners in your value chain are with you on the same page. And I think that that's a challenge that we've all been trying to face. So one of the things I think we need to think about is flipping the concept of housing delivery. Most of what we talk about these days is a top-down model, where we're saying, okay, we're going to create a manufacturing operation and we're going to give people housing. We're going to deliver hundreds of thousands of houses, 200 million families. I think the way to think about this is flip that triangle and put families, individuals at the top of that pyramid. Start there with families and communities, and then deliver to them what they need where they live. And I don't think that's an example. I can't point to any, well, I have one suggestion in the US that I can point to, and another one in the Philippines that I'll share with you. But by and large, when we talk about mass housing delivery, we're talking push down, push out to the market, instead of hear the market and build for the market, for the communities, in partnership with communities. So I want to share with you, if you'll bear with me, I'm going to read it. Okay. All right, sorry. I always think I talk loud enough, but I'll talk louder. So if you'll bear with me, I'm going to read some excerpts from an article on Maslow's theory of needs. I'm sure you've heard of it, Maslow's hierarchy of needs. And there is actually a school of thought in architecture talking about Maslow's hierarchy as it relates to housing. So here's what they say. Here's a couple things. For an individual, a dwelling is the small chosen world of the person. This approach highlights that a living environment must be provided by direct connectivity and participation of its occupants in order to reflect their personal and individual needs. And I think that's why a lot of people will wait 10 years, 12 years to build their own home brick by brick, because they can do that. By failing to promote connectivity and participation in the production of a house, physiological needs, along with a need for safety and security, cannot be properly granted. It's important, therefore, that investigation into a person's mass housing preferences be undertaken in two important phases of homemaking, namely the design phase of the initial housing units and the future personalization of those housing units as they live there. So, studies in the housing field have indicated that houses are built to accommodate different levels of expectations. It's pretty obvious. They suggest that residential spaces can be classified in three levels: shelter, house, and home. Unlike a house, a home is much more than a physical structure. Home is a symbol of lives spent within it, which means it is connotative of the deep structures of a social system and how these are reflected in the family's relationships to the domestic space it occupies. So what they go on to say is that this is counterintuitive. What they're saying is, by institutionalizing and professionalizing home building, home housing delivery, we're essentially breaking that important link of social connectivity between the home and the family, the thing that makes this a home. So maybe this is the reason that we have in Mexico and throughout African continent, Egypt also, massive projects of unoccupied houses. They're houses, and maybe they're nice houses, but nobody wants to live there because they can't make it a home. Okay, so I promised a couple of examples. In the United States, you may have heard of community development organizations. And these are socially oriented corporations or nonprofits that are specifically designed to coordinate with municipalities and communities in developing either new housing or rehabilitating housing in the communities where the residents already live. So it's, like I said, it's meeting them where they live. The problem with these community housing developments in the US, these groups have a very difficult time raising money. We don't have the same, I don't want to say, practice that you have in Africa, where families will put money, they will put money as they can into building their own home or helping a developer build a home for them. In the US, we don't have that, so there is no other source of funding other than what the government might provide or what they can raise from private foundations, for example. I'm wondering whether this community development model could work in African countries. Is there a way, as the gentleman mentioned earlier, Joe Max, is there a way that you can mobilize, match local money, individuals, family money that they're already using to build a house or save to build a house with maybe some diaspora capital and other private sector capital to create funding that is affordable, that's not competing with the government treasury bonds for returns, which is what bank borrowing does, and in many cases pension funds also. In the housing industry, we're competing with the government for money. So can we find a way to mobilize the money that we have among us, among individuals, families, small businesses, and the diaspora, and do that through some trusted network for managing the properties, owning the properties, thinking of something like an Islamic finance type model where you have co-ownership, co-investment, and cash that's invested. Oh, the gentleman's waving his hand. Cash that's invested by the families themselves. And that can be done through community savings groups. It could be done by individual families. We know it's already happening. It's just a question of whether we can do this in a more formalized, standardized way that might ultimately attract larger sources of funding into the program. Okay. So this isn't going to be the kind of thing where you say, oh, we delivered 500,000 units last year. This is the kind of thing where you're going to have small pockets of activity spread everywhere around the country. And it provides a foundation for capacity building, as was also mentioned earlier, among the contractor, builder, developer, construction skills arena. So I have an example of how that could work. In the Philippines, there's a company called Lupa. It's a tech-enabled platform. They purchase defaulted homes, defaulted properties, or pieces of land and existing developments at a steep discount, 40 to 60% discount. They go in and they renovate those houses, or they build new, very affordable housing on land plots that are already serviced. Flip those houses within 90 to 120 days, and then those homes are refinanced. They're financed with mortgages provided by the Philippines Pension Fund. Right now, I don't see a model for this working in any African country because that pension fund is huge. It's been around for many decades, and it provides funding at very affordable rates. It is able to issue paper in the capital markets to achieve government-rated paper, so they're able to achieve very low returns and cost of funding. What I want you to understand with this model is, though, that this company uses technology to look at pockets of residences in parts of the city that are accessible to all the social services required, that are of a reasonable size to accommodate a family, that can be renovated for, a few $1,000s, and then recycled to a new family at 30 to 40% below market. So it's an amazing model for delivering housing in multiple areas around the city. Well, then you say, well, okay, how are they going to do this from a construction perspective? They have, through an application and technology platform, hundreds of small contractors who are employed through the application, through the app. They're paid through the app. They do their construction progress reports through the app. Any designs, procurements, anything required happens through the app. And these contractors are trained by Lupa. As they move up the scale of skill levels, they take on bigger and bigger and bigger jobs. So they're building that construction capacity throughout the city. At the same time, on the other side, they have a pool of sales agents, representatives that are living in the neighborhoods where these homes are acquired and being built. And some of them live in those homes, so they have the experience. Same thing. These are people who manage the relationships in the community, facilitate the process very one-on-one, and it's not expensive, and yet it creates tremendous capacity in the home building, home delivery system. And what they've been able to do with this is they've been able to pool these bundles of properties and finance them with debt and equity, and each investor receives a pool of real estate assets that provides a return in roughly 6 months by the time the house is, renovated, delivered, and the mortgage is closed. All right, so two things that make that model work are A, the technology platform, and the availability of data. Data. There's one thing that governments can do is help us collect data. And of course the pension fund, an active pension fund that is clearly focused on supporting sustainable housing. Another trend internationally, and we've seen some of this already in different countries in Africa, is infill development and refurbishment of existing properties, so converting hotels to apartments or converting commercial spaces to apartments. Also infill rentals. So for sale has been the mantra for a long time, but I think more and more, correct me if I'm wrong, we'll see what the panel says, but I think more and more in the urban areas we're shifting to more rental-focused development. To do that effectively, again, it should be done with small plots, very centrally located, maybe smaller units, but with good amenities. So in keeping with the whole Maslow's hierarchy, thinking about all the things that make a house a home. And can you provide those things even in an urban environment in a small apartment? Okay, so I'll just say, as far as the supply side is concerned, I agree with points that were made earlier, that areas where government and universities, technical colleges can definitely make a difference is to work on building local capacity and local supply chains. Because the importing construction expertise, large-scale EPC contracts, importing materials is not ultimately going to serve the economic value of a housing sector in the country, and it's going to continue to make it difficult to deliver affordable units. Okay, so looking on the demand side, moving on quickly here. I have my doubts about mortgages for Africa. I think this is one of the things that I've been talking about since I first came to Kenya 20 years ago. Securitization, and it just hasn't happened. And I have to wonder, is it because people don't really want mortgages? I mean, I know the interest rates are high. That's definitely a problem. But does an African family, are they like a US family willing to commit to 30 years of interest accumulation? And I don't think so. So it may ultimately get there, but I think today, the way the financial system works, we need to come up with alternative solutions, and a lot of that is being tried already. Rent to own, tenant purchase, installment sale, And that's where this Islamic finance model comes into play. However, I do think that there are ways that government can support that activity with credit enhancements. So on the demand side, in a number of countries, mortgage insurance has been very effective at allowing families to afford a home, to get into a new home with a relatively small upfront cost. It would be something that needs to be initiated by the government in the beginning because there won't be enough data in the market to support a private sector investment. A few years ago, I looked at a proposal from a company in South Africa that was working with an insurance agency in East Africa to provide insurance to banks that would allow them to lend up to 95% of the project cost to a developer. So where the developer would normally need to put in, say, 30% of project cost, which would be their money plus most likely the home buyer's money. In this case, the bank would advance the money, the insurance company takes the risk, the home buyers make their deposits, but they're held in escrow and they're not subject to potential loss if the builder fails. That deal never came through, but I still think it's a concept that has potential value here. One other point on the area of mortgages. We financed a couple of mortgage-backed securities from Panama. And in Panama, to support affordable mortgages, the government allows for a tax credit. It's a tax credit certificate. So when a mortgage lender originates a pool of loans at below market rates, they go to the tax authority, which issues a certificate which is equal to the differential between, its value is equal to the differential between the market interest rate and the subsidized interest rate. That tax certificate is then, can be sold for cash to a company that needs, tax mitigation. That creates cash, which is then invested in an escrow account and used to match fund the payments from the home buyers to deliver market rate returns to investors. And that's what we did. We provided a guarantee of those mortgage-backed securities, which were based on that tax support system. So it provides some loss of tax revenue to the government, but there's no budget, direct cash outflow from the government to achieve lower interest costs for the home buyers. I'm going to stop there so we can have some conversation. I just want to say that think fresh, think new. I don't know that international models, which were launched 50 years ago, maybe longer, have any relevance today. This world is different. African countries are all different. So let's work together and come up with innovation, new ideas.